Hi, and welcome to the March 2017 Downtown Pittsburgh IBD Meetup presentation. My name is Eric Rossi. I'm a co-organizer for this meetup group. And on this first slide, you can see there's a link to our meetup group's homepage in case you found this video through YouTube directly. The mission of this group is to educate individual investors about the CanSlim investing strategy that was developed by Bill O'Neill, now part of Investors Business Daily. So this means identifying the best educational material available, whether it's books, articles, webinars, etc. And this presentation is for educational purposes only. I'm not recommending any securities to buy or sell. Investing in stocks does carry substantial risk and you can lose your capital. I'm a non-professional volunteer investor. Investors Business Daily, IBD, and CanSlim are registered trademarks of Investors Business Daily, Inc. MarketSmith is a registered trademark of MarketSmith, Inc. And Meetup is a registered trademark of Meetup, Inc. And prerequisite, this video assumes that you're familiar with the CanSlim investing strategy developed by Bill O'Neill. And at a minimum, viewers should have read How to Make Money in Stocks by William J. O'Neill. And the latest version is this green book shown here. If you're not familiar with CanSlim or you haven't read this book, you're certainly welcome to watch the video, but it just might be difficult to follow some of the concepts. It'll be much easier if you have at least gone through this book one time. And really, this book, a lot of really great traders call this the Bible for stock market investing. So this book should be on any serious trader's bookshelf, and it's really one that you want to not necessarily read it once, but it's something that you want to come back to again and again, and just, it would be a good one to read every year, I would say. Here's the topics for this month. First, we'll go through the market dashboard as always. Recently, I've been doing a series on CanSlim, just back to basics, and the next one that's due is the I for institutional sponsorship. I'm going to skip that this month, and that's going to be delayed till next month because I have a special topic I want to go through this month. And the rest of this agenda is the usual agenda. We'll go through the market analysis. We'll talk about my current holdings, just so you can get some examples of some stocks that are either doing well right now or maybe even ones that aren't doing so well. But I can at least show you how I selected those. We can look at the charts. I'll share my current watch list, talk about some recent trades, some good ones and some bad ones. And there's always a lesson to be learned from every trade. So it's really useful to go back through those trades and see what did you do well and what could have done better. And then the special topic for this month is we're going to look at the top performing stocks year to date. So we're almost 3 months through the year. And I thought the other day, what stocks have delivered the best gains so far this year? And a lot of them are names that you wouldn't find in IBD, and mainly because they're small cap stocks, and a lot of them are thinly traded and low priced stocks. But there's some commonalities that you can see by looking at about 10 or 20 of these, and we're going to go through that and talk about how we might capture those moving forward. And then lastly, we'll conclude. Okay, market dashboard, I'll just go through this quickly. Right now, the market is in a confirmed uptrend according to IBD's big picture. So that gets a green. And we've been this way for quite some time now. The market's been in a confirmed uptrend for, I would say, as far as I remember, maybe at least 4 or 5 months now. Probably one of the longest time periods I've ever seen without going into even uptrend under pressure. The market hasn't been in a correction now in almost a year. We're coming up on 10 months maybe. So that feeds into the second one, the uptrend health. The last correction was 200. We came out of a correction 260 days ago. So this is the longest running uptrend that I've ever seen in the time I've been following IBD's market pulse. And during this time, the NASDAQ has delivered a 21.8% return, which is really fantastic. And a lot of growth stocks have actually lagged this a little bit. So during this time, if you actually had a NASDAQ ETF, for example, or an index mutual fund, arguably you might have done better with that than with some of these growth stocks. But certainly there's been some big winners, and the goal is to always capture those and to outperform the market. But this has been an interesting market in that the growth stocks typically lead the market and outperform the indexes, and it just hasn't been seemed to have been the case the past 6 months. Distribution days, these are days of negative market action, I'll just call it. So there's 4 in the S&P 500 right now and 3 in the NASDAQ. That's a moderate count, so that gets a yellow. And the Fed activity, the Federal Reserve raised interest rates in December, and they just announced 2 days ago that they're raising rates again. And they're expecting 2 more rate increases for the rest of the year, and then 3 rate increases in 2018. So this gets a red because raising interest rates historically coincides with market downturns and bear markets. So as the cost of borrowing money goes up, that benefits some industries like banks, but companies who are more leveraged, let's say, and have a lot of debt, they're going to start paying more and more interest on their debt, which is going to take away from their earnings and their bottom line. So not that raising interest rates in this case is necessarily going to lead to a bear market. No one, I don't know that right now, and I don't think anyone does. But historically, an environment of increasing interest rates is a negative for the stock market. The S&P 500 right now is trading above the 50-day moving average, and it's up 6.4% year to date. IBD assigns an accumulation distribution rating to the indices. In their paper, they have something called "What's the Market Trend," where they assign this, and that goes A through E just to indicate how much accumulation or distribution is occurring in the general market indexes. So an A- is about the best that I've ever seen. I've never seen this stay at an A for very long. But this is very, but right now the market's very strong, and it looks like it wants to keep going higher. The NASDAQ is outperforming the S&P. It's up 9.6% for the year. That's a typo there. It should be above the 50-day moving average. And then the IBD 50, which is a composite of the top 50 growth stocks according to Investors Business Daily. This is starting to catch up to the NASDAQ now. You can see that it's outperforming the S&P 500, so that's good. But ideally, I'd like to see it outperforming the NASDAQ and the S&P. So that index, though, is above its major weekly moving averages. So these all get greens right now. So really, this is a fine time to be owning stocks, and the market's been very good this year. Really, since the Trump election was announced, the market's been very strong. Some of the longer term indicators here, the last bull market that we had, we're currently still in a bull market cycle, and it started in March 2009. So this has been going on for a very long time. It's one of the longest bull markets in history as far as I can see. So the longer that goes on, historically that means we're more likely for a major correction to come in at some point. When is that going to happen? Who knows? But historically, it's likely the probability of a bear market or a big market downturn increases as time goes on, and this bull market gets longer in the tooth. So same thing here. The last bear market ended in February 2009. So again, this is one of the longest periods historically that we've gone without a major bear market. And we've had 9 intermediate corrections in the NASDAQ during this time, since March 2009. So that's a high count. Generally, you're going to get about maybe around 5 between in the cycle of a bull market before you start to turn into a bear market. So again, that's just historically. I'm getting that from Bill O'Neill's book. So the longer term indicators are not so good, but right now the market's firing on all cylinders. It seems to be in great shape and wanting to go higher. Okay, so let's look at a market analysis. I'll bring up MarketSmith next. And then after we do that, we're going to look at some current holdings. Again, these are just stocks that I'm holding right now. Number 2 has a typo. That should be AM. And I'll just share what I was thinking when I bought these and how they're doing and when I'm thinking about selling them, just to give you some examples. And then this is my current watch list, so we'll look at that. Again, I'll just talk through why these are on my watch list and what I was looking for. It is the end of the week here. It's Friday when I'm filming this, and I update my watch list on the weekend, so this is likely to change, even possibly even tomorrow. So just keep that in mind. And then I'll go through some recent trades here. I won't be able to spend a lot of time on these, but there's some good lessons to be learned from these trades. And then lastly, we're going to look at the top performing stocks of the year. And the goal here is really to look at how could we have caught these, maybe not necessarily before they started their big move, but how could we have noticed these when they started making a big move and then bought the stocks and then capitalized on at least part of their big moves? Okay, so if we look at the charts, how could we have found these stocks? Can we set up a screen that will find and identify these stocks in the future? And I think the answer is yes, and I'll show you a screen I just built this week in MarketSmith. And then the question to be answered still is, does the screen prove itself to be effective? So I just started this screen a few days ago, so I can't yet say that it's going to identify big winners, but it so far seems to have a lot of potential. So we'll go through all that. So I'm going to switch over to MarketSmith now. So let's start with the market analysis with the NASDAQ. Looking on a monthly chart, we have been going here since March 2009. We've been in this bull market. And you can see that the market ran up really nicely here up until mid-2015. And certainly we had a couple of corrections here, but nothing major. And then we had this period, this kind of sideways period that lasted about a year. And we had a couple pretty decent sized pullbacks here, in the order of 15 to 20%. And now you can see, starting in later 2016, we basically, well, actually, let's say late 2016, after the election, we've been running higher. And you can see the past, right now we've got 5 months up in a row. And volume has been mostly average to above average. So right now everything looks good. The NASDAQ's in new high ground, you can see. We have clearly broken the prior highs from 2000. One thing I want to point out here is that I have a trend line that I was showing here previously. It would be totally reasonable to draw a new one now like this, or even like this. Probably I would use that one because that hits on a few more points here. I'll do that after this video so we can look at that next month. But that would be kind of a, you could use that as a guide if things do start to turn around and the NASDAQ were to break this trend line. Depending on your strategy, you could use that as a way to start moving into cash. So here's on the weekly chart. Again, for the past month, you can see actually the past couple months, we've had some good weekly spikes in volume. A lot of tall blue bars. And then even this red bar we had last week was a support week because it closed near the high of the week. And you can see we had 4 weeks of pretty tight trading here, and now we've gone higher this week. So this week looks like it's going to end near the top of its range. Volume is probably on par to be about average. And here's on the daily. I need to add a new mark here that the Fed announced a rate hike 2 days ago here. And so far the market's reacted positively to that. So one thing to keep in mind is that the NASDAQ is approaching, we have the 6,000 mark up here. When when the market comes into these major, they're whole numbers, but they're kind of major markers where you'll tend to see. Don't be surprised if it does keep going up and get close to this, if it bumps its head there, or if it kind of meanders around that. It would be surprising to see it just blow right through that 6,000 level, but again, you never know what's going to happen. So that's the NASDAQ. Let's look at the IBD 50, which is basically a composite of the top growth stocks according to IBD. So you can see we've had the last 3 months, the index has been up, so that's good, and it's in new high ground here. Volume hasn't been too stellar on a monthly basis. And one thing I want to point out here is this relative strength line. So this is showing the performance of this index compared to the S&P 500. And you can see here that it's basically been going sideways for, about 5 months. And you'll see that again on the weekly chart. Look at this relative strength. It basically hasn't gone anywhere since back here, 2013. So growth stocks overall, they've had periods where they've been outperforming the indices, like in here and in here. But overall, growth stocks have been lagging the market in the past couple years. And again, there's certainly been big winners that have well outperformed the market, but right now too, it just seems relative strength's kind of going sideways. And this index is fine though. It's trading above its major moving averages here, 50-day and the 200-day. Also on the weekly moving averages, it's above the equivalent ones, 10-week and the 40-week. So it's fine, but again, it's if you're noticing that growth stocks aren't really outperforming the NASDAQ and the S&P 500, this really confirms this relative strength. Ideally, we'd like to see this trending upwards, meaning that growth stocks are outperforming. So let's look at the S&P 500. I don't usually look at this, but one thing I want to point out is this came up and hit resistance at this 2400 level. So watch for this to break through that 2400 level. That's kind of the next major milestone for the S&P 500. And then if we look at the Russell 2000, which is a small cap, it's kind of a composite of small cap stocks. This had broken through this 1400 level for the first time ever, and you can see it was kind of meandering around it, and then it started selling off on some pretty decent volume. So small caps have been not performing so well the past couple weeks, and you can even see here the relative strength for the past 3 or 4 months for small caps is trending down. So that just means small caps in general are kind of underperforming right now. Again, though, that doesn't mean that we can't find some good ones. And after the election, small caps were really shot out of the gate here. And you can see the RS line spiked, and we had a big move here. But since then, you can see it's basically been sideways action for 4 months now. So it's been a little tough to make. If you're trading small cap growth stocks, in particular, you might be finding that you're not making a lot of meaningful gains, and your stocks are kind of just meandering sideways. And that's what I'm seeing with a lot of my portfolio, which I'll show you. Okay, so that concludes the market analysis. So let's go. I'll just share my current holdings. So Netflix I bought into back here. This was my B1, I call it, where I bought half a position, and then I bought another half of it over in here when it broke this green trend line. And then this thing's just been nice and steady going up here. We had a gap up on the earnings report. The earnings report was really positive. So I added to the position here on this gap up move. And you can see it basically went sideways then for a couple months. And it caught up with the 50-day moving average here and the 10-week moving average. And now it's bouncing off of there. But volume overall, you can see in this time frame has been pretty light. It's been pretty, trading's been pretty tight and sideways in lower volume, and that's constructive as a stock sets up for a move higher. one good thing is that this peak that we hit here and then before this pullback, I drew this green trend line, which we broke through yesterday, and we're still holding that. So this is still doing okay. Earnings is coming up in about a month. So I'm anticipating this is probably not going to meet the 25% profit goal, which is way up here, like around 160. It looks like it's probably not going to hit that before earnings. So in that case, as long as I have at least a 10% cushion, I'm going to hold this through the earnings report. And actually, my position's up more than 12% because this 12% is from the pivot, which is right here, and I bought into this earlier than that. So my position's up more like 17% right now. But I'm going for a 25% profit goal from the pivot here. Antero Midstream Partner. This one has basically been doing similarly to Netflix. It's been trading sideways here for the past month or two. And this one is not, I'd say, not looking as good as Netflix. We had this day here where it kind of bounced off the 10-week moving average. It didn't quite reach the 50-day, but it bounced off the 10-week. And then you can see there's been a couple red spikes here, but this was a support day as it closed. You can see it bounced off the 50-day and closed at the top of the range. This was a support day. And now trade's going tight trading in very light volume as it catches up with these moving averages here. So I'm expecting this to bounce higher. And if it does the opposite, if it breaches this 50-day moving average, particularly in above average volume, I'm going to sell this. But right now there's nothing to do here. I don't remember exactly where I bought this. I think I bought it back in here. But then I had to sell some before the earnings report because I didn't have enough cushion. So maybe I bought this one after it broke out. I don't remember. Alibaba. So I bought this stock because it broke out right here, and volume was good on that day, 55% above average. And then the breakout kind of failed, but it's not like it failed catastrophically. The stock's been trading sideways in very light volume, especially these couple days here. So when stocks trade tightly with light volume, it usually is a good sign. It means they're going to go higher. And sure enough, that's so far what's happening. We had this day here where it broke through the buy point again, and now we had yesterday was up on volume. This was a support day, despite it being a red bar. So this is looking good so far. It hasn't really taken off yet, but I really like this base, this cup with handle base, and it's been all this tight sideways trading is constructive. All right, Nvidia. First of all, I'll tell you that I suck at short selling, and despite that, I sometimes can't help myself. So I shorted this stock because it formed a climax top back here, and I ended up having it. I actually shorted it on this day, so pretty close to the peak, and then it came down, and I had a decent profit, and then it started to come back up. And I ended up covering this for about break even, and then waited for the earnings report, and then I shorted it when it breached the 50-day moving average here, and that happened on a gap down on heavy volume, and you can see since then it's kind of gone. It came down and it's coming back up, and it's testing the moving average again. So I'm looking for it to fail off of here, and then if that happens, then I'll be happy to hold this. If it keeps going above the 50-day, then I'm going to dump this. Amana Healthcare, or AMN Healthcare Services. This stock, I bought this. I kind of missed the breakout here, and then it came back. So I bought it back in here when it came back close to the pivot, and then the breakout, it came below the pivot a little bit, and again, you can see trading was pretty tight and light volume. So I was waiting for a move higher, and sure enough, it's happening now. It got a move higher this day. This day, some volume finally kicked in. It's up today with some decent volume, but I see it's reversing. So that's not ideal. But again, this thing kind of formed a peak and then pulled back here, formed kind of a second handle area, which it emerged from yesterday. So this looks okay so far. Salesforce.com, this is one if you wanted to, you could buy it right now. It hasn't broken out yet. I'm buying it in anticipation of the breakout because I like to buy these a little bit early. But you can see that this has been consolidating for a long time, 200 days. And it's been the depth of that's 21%, which is not really too bad. Not a very deep consolidation. And this thing's been moving up for a number of weeks here, you can see. And it's really been holding the 10-day moving average nicely. And now you can see the trading's very tight and volume's really lightening up. And it's kind of getting squeezed between the pivot and this 10-day moving average. So eventually it's gonna have to go one way or the other. So if it breaks out, I bought a half a position this week. I'm gonna buy another half if it breaks out. If you look on the weekly chart of this, you'll see that there's like 10 up weeks in a row here. So so that's a really positive sign as this stock finishes, as it kind of approaches this buy point. And Zayo Group, this one I actually just bought today. I really like setups like this where it's not a very deep consolidation or base, and there's a nice trend line that I could draw here. So it broke that trend line today, so I bought half a position. When it breaks, if it goes above this 34.42, I'll buy the other half, and then possibly add a little bit more if it breaks out here. But I really like setups like this, and this is a newer issue that has earnings are just starting to kick in. Sales growth has been there for quite some time. So this is only a first stage base. So I like this one quite a bit. Okay, watch list. I'll just go through quickly what's on my watch list right now. Keep in mind I update this on the weekend. So being it's Friday, I'm gonna update this tomorrow or Sunday. So some of these are probably gonna come off of here, but this is what I have right now. Burlington formed a nice base here. It is a later stage base, but it had a gap up move after the earnings report, closed at the high of the range, heavy volume, and you can see that it's been holding above the pivot since then. And it's trading's quieted down, tight sideways, trading with light volume, so that's good. It's getting to be a little bit extended, 3% from the pivot, but you could still buy it here. This one looks good for right now. Essent Group, this one, MarketSmith's not showing a base here yet, but it basically isn't a base. It came up and hit this peak of 38.10, and now it's forming, it's kind of a cup, or it'll be a flat base. But you could even draw, in fact, I'm going to do this right now. You could even draw a trend line here. I'm going to set an alert for that as a kind of an early buy point. But this is a nice little consolidation forming above the 50-day, which I like. Dave & Buster's, this one I'm probably going to take off my watch list. This stock just seems to, you can see it's been going sideways here for like 4 months. And then it tries to break out here, it fails. It tries to break out, it fails. It breaks out again, and it just seems like the stock just seems to be a little bit too up and down for me. Health equity. This one, I got an alert the other day. This trend line was broken. I would have actually bought this, but they report earnings they report earnings mid next week. So I didn't want to buy it because I probably would have to then just sell it, after like a week. But I'm watching what happens on the earnings report. If this breaks out, uh, I would love to see a gap up breakout on heavy volume and a close at the high of the day. If it does that, then this would be a good one to consider buying. Dicom, this one is in this long kind of consolidation period here where it's been going mostly sideways. It had a big gap up on its earnings report here, and you can see it got really close to this buy point, and then it pulled back, and it's just kind of trailing off here. It's kind of like a handle, and I'm going to put a trend line on there. I don't know why it won't let me do this, but I had this problem earlier today. But anyways, if it breaks this handle trend line here, that'd be a fine time to buy this in anticipation of it breaking out. Forterra, I'm probably going to take off my watch list because it is a newer issue, which I like. It does have high earnings growth and high sales growth. It made a good move higher here before pulling back. We'll see. It's the nice thing about this is if you buy this now, it's got 16% to go before it even breaks out. So if it does end up breaking out over this buy point, you would have a really nice gain already. But this is just a little sloppy, and it's trading pretty low in this base right now. So this one I'm not so sure about. I need to look at this a little more closely. Okay. Let's look at some recent trades. Okay, let's look at some recent trades here. Okay, so Snap, this is a recent IPO, and this company doesn't really have any earnings yet, you can see, but their sales growth is really high. So this opened, the IPO price was 17. It opened well above that. You can see it closed at 24, and it came up a bit, and then it started correcting. And I bought this on it's called an undercut and rally situation where it formed this low at 2064, came up a little bit, and then it came back and it undercut that low. So I bought it on this day, which it closed just above that point. And you can see that as this thing pulled in here, volume was really light. So I was expecting it to bounce at some point, which it did. Volume on this day wasn't that great. But I ended up having to sell this for a loss the next day because it came down. Because it came down and closed at the bottom of the range, and you can see it's down again today, and volume's picking up. Plus, this had looked like it was finding support around 20, and it broke that support yesterday. So this was a quick one. I was only in this trade for a day, and it was a loser, unfortunately. And in hindsight, this probably wasn't the best setup to go for because you can see that the stock moved up, and then it had this huge reversal day. Then it had a gap down move. So there was just a lot of volatility here, and so there probably wasn't enough. I think if you're going to do this undercut and rally type of thing, it needs to be more of a steady decline the second time, and not such erratic behavior. But I was thinking initially, let's go back to that. I was thinking initially, this thing, I would sell maybe half of it if it broke through this prior high at 2368, and then if it did happen to come back up to here, I would probably sell into that if it broke through this price. but that didn't happen. So next one is Lumentum. So Lumentum, this was on my watch list as it was breaking out here, but I didn't have buying power till around in here. In fact, I think I bought it this day, and it was it was pulling back towards the buy point, and I was expecting this thing to bounce off of it, not to keep coming down and undercut the buy point, but it did, and I ended up selling this one also for a loss on this day. And I really wanted to wait and see if it would hold the 50-day moving average, but I didn't want to wait another, this was 6% away from there. I didn't want to wait another 6%. That would have been way too big of a loss to take. So, and sure enough, the thing was down the next day, got near the 50-day, and look at it bouncing off of it in heavy volume too. So this is a little bit, this thing took off quite a bit after the earnings report. Went up quite a bit, and then it declined. This decline was something like 20%, so that's a pretty big decline right after moving up that quickly. But it came back up. It would have been totally fine to rebuy it on this day, although I think I had bought something else instead. I think I had bought Snap, so I didn't buy this. But this one, I think the takeaway here is if you're gonna, the better move here was really to buy this back on this day. And granted, it pulled back into buy range here, but on this gap up move after the earnings report, you could have got into it maybe midpoint of the day or so, anticipating that it would break out. And if you had done that, if I had bought this around 44, let's say $44 a share, $45 a share, I would have been able to hold down to here and really use the 50-day as a stop. So where I bought it, I couldn't use the 50-day as a stop because it was too far away. So I think this was really a case of just not buying at the right time. Rather than, I don't think this position was mismanaged. It was just, I didn't buy at the right time, which thus didn't allow me to set a good, a nice stop. Glaukos, this is my best winner, the best position of the year. This one formed a cut base here that it kind of broke out of, and then it formed this handle here. This was very attractive to me because this handle was mostly in light volume, and it broke out on this day on really heavy volume, finished at the top of the range. And then you can see this thing was really easy to manage after that. It held the 10-day moving average. And this day before the earnings report, I set a limit order to take profits at around $50, which is where the 25% profit goal was. And I did that because I was going to be in meetings at work this day, and I didn't want to miss an opportunity to take my profits. And I had a recent stock that we'll look at called Trex that hit my profit goal after the earnings report and then tanked. So I didn't want that to happen again. So I set a limit order this day, and it got filled right at the open here, near the very top actually, which worked out beautifully because you can see it reversed and then it sold off. So I would have given back a lot of gains if I had held it. So that was a good trade. That was probably that was my best performer of the year there. Probably took a 27% gain on that. Baozun, this stock has high earnings growth. Sales growth is decent, and I found out about this one from another meetup group, and I had set this trend line back here, which was a nice trend line. So I bought it when it broke that trend line back in here, and it started going up, and I was sitting on a nice gain here, and I think I actually sold it here like 2 days before the earnings report, which ended up being a bummer because it was up a lot on the day before the earnings report. And I probably would have had enough cushion to hold this through the earnings report, but no, I'm sorry, I did hold this through the earnings report. I held the whole position. So anyways, I held this through the earnings report, and you can see that after the earnings report, this day, it didn't really do a whole lot. It was heavy volume, and it was down a little bit, but not a lot. And then the next day was down a lot. It was down 8%. So I sold on that day, And I took a profit on this, but not nearly as big as I wanted to. So that was a tough case where Chinese stocks really got hit this day. Um, I definitely wasn't expecting I definitely didn't think an 8% drop in one day was in the cards for this one. But this thing is setting up again. It's been in this long consolidation since October, and there's another trend line here that's emerged that's hitting a bunch of points. You can see the stock is getting squeezed between the $15 level and the 10-day moving average and this trend line. So it's going to go one way or the other. If it goes up through that trend line, if I have buying power, I'm going to try it again. Weibo I had bought when it broke out of this double bottom back here, and then it had a lot of hype going into the earnings report. You can see it gapped up here. It gapped up 5%. And I had a decent gain going into the earnings report, and I decided to hold it, and this thing just got destroyed on the earnings report. It was down 16% in one day on the heaviest volume on the chart. And this was the widest bar day since the start of the move way back here, and the biggest percent drop. So that's a really ominous sign, and I'm thinking that this thing is not gonna keep going up. I'm thinking that the big run for this guy is over. Well, who knows? We'll see what happens, but I'm thinking with a day like that, that shows a lot of people were selling this thing, and it's hard to believe it's going to keep powering higher like it did last year. But again, this was a case between this one and Bowsen. I really got hurt on the earnings reports on these. So I've modified my sell rule. I used to hold, if I had at least a 5% profit cushion, I would hold it through the earnings report. My new rule is if I have a 5 to 10% profit, then I'm going to hold half of the position through the earnings report, and I'm going to sell the other half before the earnings report to lock in those gains and protect, to limit my risk. And that way, if the stock does move up big, at least I'm getting advantage. I take advantage of some of that. And if it craters like this, then I'm only taking a loss on half of my money. And then if I'm up 10% or more in a stock, like I was with Glaukos, I'm going to hold the whole thing. So again, just an example of how you could manage positions around earnings reports. All right, I think this is the last one we're going to look at here. Yeah. Trex is the last one we're going to look at. So this stock, I bought this stock back in here when it had this gap up on the earnings report. It had formed this really nice double bottom, and it moved up really quickly out of here and then basically went sideways for a number of months. And it can be hard to sit through this. This was November through February. So this was 3 months. I basically sat on this thing and it really wasn't going anywhere. And there were times I thought about selling it so I could put my money into something that was moving. But I decided I was going to wait for the earnings report and see what happened. And I had a nice cushion on this. I had about a 15% profit cushion. So I was, even under my new rule, I would be justified in holding the whole position into earnings. And what happened was, at the open, this thing gapped up big time, and it actually broke through my profit goal. And instead of selling and taking my profits there, I held it to see how it was going to close the day. And you can see what happened. It ended up reversing, and I ended up having to sell this near the bottom of the day. And then and I'm glad I did in hindsight, because the next day was down and would have wiped out a lot of my gains. But this kind of prompted me to come up with a new sell rule for earnings reports. And if I had used my same strategy on Glaukos on this guy, then I would have put a limit order in up here, and I would have sold out early in the day, and I would have locked in my 25% profit. Actually, more than a 25% profit, because I got into this stock early. So that was a lesson learned here. If I have a rule now, if I'm up 15% or more going into the earnings report, then I'm going to set a limit order at the profit goal. So that way, if a stock moves up big like this one in Glaukos and has a reversal, I'll take my profits, hopefully near the well, whether it's near the top of the day or not, I don't really care, but I just want to lock in those profits if it hits my profit goal. All right, so the last topic I want to talk about is the top performing stocks so far for this year. So I have a screen here in MarketSmith called Top Performers Year to Date. And all this is it takes the top performing stocks and top percent movers, and anything that's I believe it's anything that's $3 and higher in price. And let's look at this screen actually. Yeah, so the percent change year to date is 50% or more, and then the price is $10 or more. The current price. So if it's moved 50%, that means that it would have at one point earlier in the year been trading below $10. I could probably go a little lower on this, like $8, but we'll leave it at that for now. So let's look at this screen, and let's look at I'm just going to look at maybe like the top 10 performers for the year. And the point is to study these and see how could we have maybe found these earlier when they were making these big moves and taking advantage of these. Now, I'm not taking into account earnings and sales growth and really fundamentals here. And you'll find that as we go through this, a lot of these stocks are small caps. They're thinly traded for the most part, and they're going to thus be more volatile. So I would say this is not a strategy to go dumping 50% of your portfolio in, but it's something if you want to play around with it with a little bit of money, and it could be a way to, on that little bit of money, make some big gains in a short period. So the first one here is this Calithera Biosciences. I found going through this exercise that a lot of the top performers for the year thus far are biotech stocks. So this is a biotech which fits in that mold, and you can see here that this thing was kind of was in a base, like a cup type base, for a long time, right? Over like almost a year. And you can see that leading into it making this move, it was basically trading sideways. And right before volume had tapered off, volume dried up, so we got tight sideways trading and volumes tapering off. Okay, that's a good sign for any stock. And what happened is I didn't go back and look at what happened here, and I don't really care, but the stock had this huge gap up. 47% on 1,800% increase in volume. Okay, so I've set up a screen now for stocks that are making a move up in really heavy volume like this. Okay, and when I say really heavy volume, I'm talking like 400% or more, and really the higher the better. But something to consider here is that the stock was coming out of a mostly sideways area where it was trading tightly, and it went higher here to a new high price, at least from what we can see on the chart here. And volume was really heavy. It closed at the top of the range. It was a gap move. So this was all really positive technical action. And again, I don't know what was behind this move. I'm sure I could go find out. But you can see, obviously, if you would have saw it on this day and maybe bought it anytime in these next few days, you would have enjoyed a really nice move here if you still had it. And you can see that after it made this move up, it kind of traded sideways here, and volume quieted down a little bit, and then it started to make this move higher. And this reminds me of a stock called REN from last year, REN, that did something similar. So, and then you'd obviously have to come up with when you're going to sell this thing. You could say a decisive break of the 10-day, for example, which would probably be today, you'd be selling it. Or you could just sell into strength as you have these big up days. You could just reduce this, reduce your position by, a third or a fourth. But this is just to give an example of, this is the top performing stock for the year that's trading at $10 a share or more right now, and this one has decent volume. So this one shouldn't be. This one historically is not super volatile, like a lot of low price stocks can be. So this isn't a CanSlim approach to investing. This isn't. I'm sure this is not something that's covered in like Bill O'Neill's books or IBD. This is just something I'm sharing as a way to just try to understand how could we possibly find these big winners. So let's keep going. Okay, the next one is another biotech stock, or medical systems rather. This one, same thing. You can see that this thing was trading, it had tight trading here leading up to whatever happened on this day. But if we were looking for stocks that were jumping in really heavy volume, look at the volume on this day, 1,400% above average and a 23% move. Okay, and you can see if you would have seen this on this day and said, okay, I'm going to give this thing a shot, you would be now sitting at almost have tripled your money. And you can see this thing really hasn't had a big pullback in here. I mean, it pulled back here 10, 15%, and then just boom, shot higher. And it looks like they just reported earnings too. It's kind of going parabolic actually, so this would be a good time to like reduce if you did own this. But again, we have this long kind of sideways period of low volatility. Volume was relatively quiet leading into this, and then we have this huge surge in volume, huge surge in price, huge surge in volume. So if you see something like that happen, not guaranteed this is going to be the outcome, but it's certainly a common theme I'm seeing in the big winners for the year. Like this one here, this one, again, basically trading sideways for a number of months. And then you can see that, and trading's pretty quiet all throughout here. And then all of a sudden, maybe they had an earnings leak or something, but this thing shoots up 100% on a 3,000% increase in volume. So if you would have bought it this day, like towards the end of the day, 10:20, okay, you would be up 35% right now after a couple weeks. And maybe you could just say, if this thing violates the 10-day moving average, I'm going to sell it. Or you could just sell into strength as it keeps moving higher. But again, this is a common theme I'm seeing with these big winners. Just out of nowhere, a huge move in price, a huge surge in volume. Here's another biotech. Okay, so this one, same thing. You see we got this tight sideways trading in here, and then all of a sudden we've got some increasing volume. This one didn't have a massive surge in volume till it had already made a lot of its move. But again, even if you would have tried it back here, you could have got maybe you would be at maybe almost a 10% gain in a week or two. Okay, so here's an example of one that you would probably want to avoid. Okay, look how volatile this trade was back here in November. Huge gap up. We're talking what, it goes from $7 up to 15 in a day, and then swings back down to 10. Okay, and then look right here. We've got to move from $4.79 up to $17 in a day, and then the next day it's down 38%. All right, this isn't the type of stock you want to mess with. Just seeing this back here, you just wouldn't want to mess with something like this. This thing also came off of a sharp decline here before it started its move higher. So we don't have the sideways, the kind of quiet sideways action like the previous ones showed. So if you're going to try this strategy, I would stay away from anything that has any super volatility like a day like this in its past. You know, it's just too risky for me at least. Okay, here's another one. This looks like the first couple we looked at. This thing had mostly sideways trading here for a long time, for really going back to last year. And then all of a sudden, out of nowhere, we get this day right here, 1,000% surge in volume, and it's up 30%. Well, again, if you would have bought, let's just say you would have bought it at the end of the day here, 16 bucks. You know, you could have doubled your money here in a couple months. And you know, you wouldn't have probably caught this exact top, but even if you said, if this closes below the 10-day, I'm going to sell it, you know, you would have sold one of these days. Now, I don't know what happened today. This thing got crushed, but you know, you can see these gap up moves, or this one didn't really gap up, but it just traded highly, you know, traded up a lot on huge volume that comes out of nowhere and makes a new high, at least in the, you know, relatively near term. You know, these things can just be really explosive. This stock, this is a transportation stock. This guy was mostly, you know, again, mostly trading sideways through here, and then it didn't really get a huge surge in volume till up here, and even that's not that big. This one probably wouldn't show up on my screen because I'm screening for a 300 or 400% increase or more. This one's had a lot of increase in volume, but not like a super huge day that you could have easily seen. So this one would probably have been tough to find. This stock here was formed a base, and then again, you know, mostly sideways action here. It's another biotech, and you can see we get this day here 800% surge in volume as the stock trades up off the 50-day. You know, and it's approaching a breakout, a base breakout. So again, it's a big clue. You know, even if you would have bought either of these days, next thing you know, this thing's shooting up almost 30% in 3 days, and then look, it takes a rest and mostly goes sideways, and then it just powers higher right here. 14% in 1 day. Looks like that was an earnings report. All right, here's another one. This thing was, you know, trading in this range. This kind of forming like a cup here, cup with handle. Trade in this range. You can see that volume, as far as volume markers, we had a day here in heavy volume, 300% surge. If you would have tried it here, you probably would have had to sell it because you would have been down. It did decline quite a bit. But let's see, is there a big surge? I'm looking for like a 400% or more percent surge in volume. Maybe not till this day, 340%. You know, this one maybe wouldn't have produced any huge gains. I don't think this would have shown up on my screen either. What I'm kind of looking for is just these stocks trading sideways, particularly if they're trading tightly on low volume, and then just have this explosion higher in huge volume. And I'm just studying this strategy right now, but I'm gonna start, if this proves itself in the next couple weeks, just maybe buy one of these at a time and not put a lot of money into them, and just see how it goes. Some of these stocks I noticed came up on this list are what I call gappy. Like this stock, you can see how it gapped up here. Now we've got gap down, gap down, gap down. It gapped down here. Now look at this gap up, gap up. I'd call this a gappy stock, and I would stay away from these because that's way too much volatility to stomach, in my opinion. AAOI, this stock has been in IBD. It's been it has earnings growth just kicking in, and you can see this one. We had a day back here, 800% surge in volume, and the stock's up 30%. Okay, and that coincided with the base breakout here, which is a very good sign. And look, the thing didn't do a whole lot. If you would have bought it here, it didn't do a whole lot for a few weeks, but then it shoots higher all of a sudden after the earnings report. It's up 20% after the earnings report. Then we've got an 8% gap up day, and then a 6% up day. So you can just make a lot of money in these really quickly. And, particularly if you're going to sell into strength, like, selling into days like this and this. This stock here was, again, mostly going sideways, relatively tight trading, and all of a sudden, we get this day, this breakout day on heavy volume, and then this thing kind of went sideways for a while and shot higher. This one probably wouldn't show up on my screen because the volume signature is a little low. Here's one more. Here's the last one we're going to look at. This one traded, again, in this pretty tight range all throughout here. And then all of a sudden we've got this huge move up, 20% move up in a 600% increase in volume. And look at this thing. It goes from $9 a share up to 16, almost double your money in a couple months. And if you were selling into strength as this thing went up, maybe you would sell into these, maybe you would sell into some of these days like this. It just depends how you want to do it. And you certainly, even if you got caught on this day, this big decline, let's say you sold at 13 at the bottom of the day, you still would have a 30% gain in just a couple months, and that's great. All right, so in conclusion, here's the screen. I'll just show the screen that I set up to start looking for these stocks. The current price of the stock is $3 or greater. The average volume is at least 20,000 shares a day. So these stocks are not very liquid, but I'm not buying $1 million worth of these, so it's not going to matter that much. Just keep in mind that you can be subject to more volatility with this. A 300% increase in volume on a daily basis. I don't want ETFs, I just want individual stocks. And then I want something that's up in price. When I first put this screen together, I was getting stocks that gap down in price. And I don't want that. I want them up in price. So if we run this screen right now, I'll show you one that caught my eye today. Now, one like this, if you're going to use a strategy like this, I'd advise you wait towards the end of the day, because obviously you wouldn't want to have bought this stock at 7 and then have to sell it at 6. You'd be down a lot of money in one day. So by waiting towards the end of the day, we would know, well, this thing had this big reversal. I wouldn't mess with it right now. This stock kind of came out of a longer downtrend, which is a little concerning, but it did break through the 50-day moving average very handily on a huge surge in volume. And it's only 8% away from the 50-day, so you could use that as a reasonable stop here. So this would be a fine one, I think, to try. It's a medical stock, which tend to be, a lot of these big winners tend to be medical stocks. This one, a biomed stock. Again, it's up in huge volume. Broke through this moving average after a relatively, sideways period here on really light volume. This one looks really good. This one, if we were waiting till the end of the day, probably wouldn't touch it because it is below the 50-day moving average, and it couldn't break through that. That's a sign of weakness. Sometimes with this screen, I'll get stocks that didn't really move much. They just had a lot of churning. This means this stock has basically had huge volume today without a major price move. That just means that there's an equal number of buyers and sellers, and it's just not going anywhere. This would be a good one to try as it broke out to relatively a recent new high, and a huge surge in volume after kind of trading relatively sideways for a long time. And then one I'll show you that came up today is Vexus. This one broke out. This coincides with a breakout from this cut base. You can see that it gapped well above the buy point, and volume is 630% above average, and it's looking to close relatively near the top of the range. So this would be a good one too. And the nice thing here is you could set your stop to, the low of the day was basically $80. You could set your stop to $80, which is about a 5% stop. So assuming something really bad doesn't happen, you're not risking a whole lot of money. You're not risking a huge loss on that. So I'll be sharing these stocks moving forward. Like I said, I'm not ready to put money into this yet. It's just in the studying phase. But I think this strategy has some merit. Okay, so if you found this video on YouTube and you're not a member of the Meetup group, you can join the Meetup group by following the below link. You do need a free Meetup account. And if you're asking why should I join the Meetup group, we are going to continue having meetups, whether they're in person or webinar based. So you do have an opportunity to talk with other members of the group. And I also do notify the group when a new video is up and a new presentation is ready. And you can also, without being a member of the Meetup group, you won't be notified to be able to participate in any meetups we have. I didn't have any questions from last month from any members. And in conclusion, next month I'll continue with the CanSlim basics with the I, and then the following month we'll wrap up with the M. If you have any suggestions for future topics, just shoot me a message on Meetup. I answer all my messages there. And I'll be sending out an invite for an April webinar-based meetup for our group. So thank you, and I will see you next month.